it seems like you potentially get into not only an interesting environment. What I mean by interesting is a challenging environment from a macroeconomic perspective, but you have this wall of debt that needs to be refinanced, towards the back half of this year, third quarter of this year, and rates are still at 425, 430 on the 10-year. So, the question becomes what happens between now and then, and does the Fed recognize this, or are they squarely focused on their dual mandate as you just described?
Well, I think a lot of what you're describing is the long and variable lags of monetary policy, and
Sure.
and they have not, while the Fed has incrementally eased over the course of the last couple of quarters. Interest rates today are a lot higher than they were 3 or 4 years ago, and that effect is basically, is you kind of think about it like a lead weight on the balloon of the economy, right? It's just kind of constantly dragging the economy down to some extent, constantly eroding it. I think the thing that's interesting in terms of the markets is a lot of that repricing of debt is really is not necessarily obvious to people because it's outside the public markets and in things like private credit.
Sure.
And bank lending. And so you're seeing a lot of rolling over of the debts in those environments. And so you might see, whereas what you actually see in a lot of cases, some of the publicly traded bonds are, they were able to term them out even more than the couple of years, post-COVID. And those companies actually, from a cash flow perspective, like things like high yield bonds, are showing some of the best credit conditions than they have. Today's high yield bond index is totally different from yesteryear's high yield bond index. And so it kind of creates an interesting dynamic where you might actually see public market investment opportunities that still look pretty compelling given that structure, that they've termed out the debt and the companies are a lot better than they were before. And a lot of the erosion is happening a bit under the surface in terms of with private credit and bank lending. And that has a real effect on the economy, but maybe it's not showing up in the publicly traded markets as much.